Hi, Peter Jones, author, property investor, ex-chartered surveyor, and I've had a great question in from one of my viewers asking, should I buy now or should I wait until next year? In fact, the specific question was, I found a good deal now, but should I put it on hold? Should I buy it now? Should I wait until next year? And of course, the premise behind the question is that although we're in a little bit of a property boom at the moment, I'm recording this in October 2020, in my opinion at least, and it's an opinion that's shared by many others as well, we're going to see a property correction. I'm not going to say crash, but it could be a crash. Who knows how large the correction is going to be? But I think we're going to see that over the next few months. That could last for months, it could last for a year, it could last for 2 years. And the premise behind that is that the virus hasn't gone away. The economy is still below the level it was at. There's still a lot of industries and businesses which can't really open or operate at full capacity. And the furlough scheme's coming to an end, and the unemployment is going to spike, and all of these things are probably going to have a very negative impact on the property market. So it's a great question. If you find a deal now, should you buy it or should you wait until next year? Now, it's a good question, but unfortunately there is no quick and easy answer to this, sadly. Sadly, it's not a question of yes or no, or do it or don't do it, because there's too many things to take into account, many of which are individual to us as investors. So let me just give you a few ideas as to some of the things which I think would influence me if I was making that decision, because of course I can't give you financial advice. You will have to make your own decision around this. Now, as I say, the presumption is that if the property is going to be cheaper next year, then it makes sense to wait, but there's other things to think about. So for example, in the 2007-2008 property correction stroke crash, one of the things which we saw was that although properties became cheaper, it actually became harder to get property finance. Not surprisingly, because the property market was in decline, the banks decided that they didn't want to lend so much money. Those banks which would lend changed their terms, and so loan-to-value ratios, for example, dropped. And it was just harder to get the money. They tightened their criteria so they could weed out more people, and they only wanted to lend, to sort of blue chip borrowers. For many of us, that could be something which we want to take into account. Maybe, depending upon what deal the deal is today, maybe you'd want to take the deal today so that you can get finance, rather than risk getting a better price next year and not being able to get finance. That's one thing we could take into account, for example. Another thing which I would want to take into account is, why am I buying the property? If I'm buying it as a buy-to-let and I'm going to hold it for the next 20, 30, 40 years, I'm going to be less price sensitive. Now, I'm not saying that you don't want to do a good deal, and I know that we've all been brainwashed by the term that the profit's made on the purchase and all that kind of, or the money is made on the purchase. We've all heard that, but the reality is, if you're going to hold the property for the next 20, 30, 40 years, and assuming at some point in the future there's going to be a recovery, hopefully, who knows, but hopefully, and probably over the next 20, 30, 40 years, we're going to go through at least another boom bust cycle or two, then the chances are that in 20, 30, 40 years, the property is going to be worth much, much more than it is now anyway. And if you've taken out finance because of the effects of inflation, the real value of any mortgage that you've taken out will be that much lower. And so you may not be actually very troubled whether you save yourself 5 grand or 10 grand or 20 grand today. You'll just be glad that you bought the property. The other thing to think about is cash flow. If you're buying for cash flow, again, then maybe that means that you're less price sensitive. Now, all of these things which I'm telling you actually layer upon layer. You're not using any one of these things to make your decision. So for example, you may be thinking, well, actually I'm buying it for cash flow, and if I buy it now, I know I can get finance and the deal stacks. If I leave it till next year, I might get it cheaper potentially, but I can't get the finance, and then I won't get my cash flow. So all of these things need to be thought of together. So why are you buying the property? If you're buying it to hold, maybe you're less price sensitive, but if you're going to buy it as a flip, for example, and you need to be guaranteed to sell it within the next 6 to 9 months, it's going to be harder to sell a flip property for a profit into a market that's in decline. So again, you've got to think about strategy. If you've already got a portfolio of properties and you come across a property which really fits your portfolio, for example, I've bought properties because it's almost a bit like Monopoly, and I don't mean that in a flippant way, but it's just sort of acquiring a property which fits the set. Well, maybe I'd be prepared to pay a little bit more now to make sure I get that property, rather than risking not being able to buy it next year, even if the price drops. If you're a developer and maybe you've got a plot of land but you need to buy a ransom strip, for example, to actually open up the development land. You might want to buy that now while it's more expensive, presumably, rather than wait until next year when it might be cheaper and you may not be able to buy it, and then you can't do the development. So you can't just think of it in sort of terms of a single answer for everything. You've got to understand why you want to buy the property. Another thing I'd be thinking about, if I've got a deal today, is it a great deal? Or is it a bit marginal? I mean, if I'm already buying it at 25% below market value today, then maybe I'll just buy it. If I'm only buying it sort of like at about 10% BMV, but the figures still stack today, I might think about buying it. Again, you've got to understand why it is you're buying the property. My criteria is basically I can get my money back out, or all or most of my money back out when I do a deal. If I can do that now, then I'm much less worried about what's going to happen to prices next year. There's always going to be ups and downs in the property market. So I may think, well, this is still a good deal for me today, and I'll take the risk that in 5 years' time, 10 years' time, it's going to be worth the same or more than it is today, even if there's a dip in the meantime. So how marginal is the deal? How good is the deal? If it's a really good deal and you've already got a buffer built in, then maybe that's okay. Maybe that means that you should crack on. Now that's the decision you've got to take. And then, of course, another thing which we need to take into account is, what do you actually think is going to happen in the market next year? Are you thinking that it's going to be a 5% dip? Are you thinking that it's going to be a 10% dip? Are you thinking it's going to be 20% or more? That could influence your decision. If you think it's only going to be a 5% dip and you've got a deal which is already 25% below market value today, then maybe you'll think, well, I might as well just go on and do the deal. If you've got a property and you think that there's going to be a 25% correction next year, then you may take the risk of not being able to find the finance in the form that you want to find it, because you're going to be able to buy it so much cheaper. So again, that's another thing which you need to take into account. What do you actually think is going to be happening next year, and how much do you think you're actually going to save if you don't buy now? Now, we've probably all got different opinions on that, and if you Google, property market predictions for 2021, you'll see a whole range of ideas, ranging from nothing very much is going to happen, all the way through to, the world's going to completely collapse and everything's going to be worth nothing. So you can take your pick, and of course, until we get there, we really don't know for sure. So sadly, I can't give you a definitive answer on this. You'll have to make your own assessment. You'll have to think about the probabilities and risks of whatever it is you're hoping will happen or hoping won't happen, and then thinking about the deal itself and how good the deal is and what the deal means to you and whether you really need to buy that property, whether you can afford to take the risk of waiting till next year and seeing whether you can get finance. All of these things, layer upon layer. So it's not a simple binary yes or no, do it, don't do it answer. So as a final sort of conclusion on this, think about what it is you want to buy the property for. If you need to sell it anytime soon, that could influence you one way. If you're prepared to hold it for the next 20, 30 years, that could influence you in another way. Even put together a spreadsheet and do an analysis and go through some different scenarios and see what it means to you in terms of cash flow or capital growth or growth of equity or shrinking of your equity in the property. All of these things are going to help you to make a decision. And if you come over to my website, www.thepropertyteacher.co.uk, and click on Learning with Peter, you'll find loads of great resources, including my best-selling home study course, The Successful Property Investor's Strategy Workshop, in which I'll take you through how I started my property business with literally none of my own money and bought £2 million worth of property in just 4 years and replaced my day job with passive income from the portfolio. It took me 4 years of trial and error to learn the best way to do this, but because I'm going to show you everything I did right so that you can copy it, and everything I did wrong so that you can avoid it, I'm sure you can achieve far more than me and far more quickly. So please visit my website for full details of this and all of my other resources. And until next time, here's to successful property investing.